All right. Hello, everybody. Welcome to the market close. We are here today. It is January 11th, 3:47 p.m. We got about 13 minutes into the market close, and we've obviously got to discuss a ton of things that are going on in this market. It's been a very interesting day from a variety of perspectives, primarily the CPI report that came out that was definitely hotter than expected. I think a lot of people did not expect a 3.4 on the headline and then a 3.9 on the core. Expectations were 3.8 on the core and then 3.2 on the headline, and we came in hotter on both of those. Shelter and energy came in hot. So we're going to talk about that CPI report and why the path to disinflation is still alive, and the market is fine with it. It's just maybe going to take some time to get there, and because it's going to take some time, it's not going to be as easy. And then we also have Bitcoin. That is not mooning yet. I've been trying to do some due diligence on why Bitcoin is not mooning. And there's actually some logical reasons for why we haven't seen a lot of the price action that we are looking for here. And I want to talk about that and get into that as well. Broccoli says, Amit, you need to do that thing where you make the stock market go up. I think today is one of those days where it's going to be harder to help the stock market just continue to go up. The big thing I'm seeing, guys, when it comes to Bitcoin, and I talked to a couple people about this, apparently in the prospectus, if you look at the ETFs and how they outline the execution by which they will buy up the assets, right? But buy up the actual Bitcoin. Two things. Number one, it has to happen after hours. So it's the funds that have been coming in are kind of like pre-orders, and they're going to be settled as the market closes. Why is that happening? I have no clue, but like that's an argument, right, for how we're kind of thinking of what's happening here and how it's gonna ultimately allow itself to happen. And then number two is that they have to find Bitcoin that's available for them to even buy, right? And so that's why you got Coinbase's institutional product that is so important. But if you've got a lot of orders coming in for a lot of Bitcoin, they have to find a diversified set of areas in which they can actually purchase the Bitcoin. And that also is not something that has necessarily been set in stone yet. So honestly, at 4 p.m., it'll be really interesting to see kind of how the Bitcoin is performing right now. Bitcoin at 46,590. We did hit 49,000 in the morning. For those that were with me in the morning, we did see 49,000 on Bitcoin. A lot of that seemed to be sort of some built-in momentum that was trying to front run the ETFs, but it wasn't necessarily the ETFs buying in yet. At least that is the best of my knowledge for what I'm seeing. But we've got a lot to talk about, and we'll get into that and try to understand everything that's going on. Vaf, Harry, David, Tom Brady, Harold, James Velez, Brandon, General Awareness, Philip, Aria, R. Lee, Mr. Seymour Duck, ET FaceTime, Matt, Blake, Bobby, Anthony, Jeff, Christian Soto. Thank you all for being here today. Blue Roo King, Broccoli Bob, R. Lee. Christian says, well, where are they going to find these coins? That's my question. Where are they actually going to find all these coins? Like, if you've got to buy 30,000 Bitcoins tomorrow, you can't just find them. It's not that easy, right? And that's why Coinbase is so important here. But also, it's just like, where is, like, where are the coins coming from? It's not like a stock where you could just find more of them, right? And so, well, that's news big if true. Yeah, if you look at the prospectus on the ETF, the prospectuses say that they have to settle the funds that they get from the orders on the closing day of the orders. Why is that the case? I have no clue, but that is what it says. And so if that is the case, maybe after the market closes, a lot of people aren't expecting that there's going to be some broader momentum here, because a lot of those inflows are going to start to come in. They are buying them from the miners. Yeah, but so they're buying them from the miners. They might have to buy them from Robinhood. They have to use Coinbase. Like, they have to find the coins. And the other thing is, if they're trying to find the coins should, and there's that much competition for those coins, that should also put some more upside momentum on Bitcoin as well. So we're going to see. We're going to really see what happens. We have some breaking news. I want to cover this as well, because this is just kind of ridiculous that ended up happening today. Vanguard is not letting their customers buy Bitcoin. That is what's happening right now. It's not a headline. It's not clickbait. It is quite legitimately Vanguard says, this is what they say. I mean, I read this and I was just like, this is just absolutely ridiculous. While we continuously evaluate our brokerage offer and evaluate new product entries into the market, spot Bitcoin ETFs will not be available for purchase on the Vanguard platform. We also have no plans to offer Vanguard Bitcoin ETFs or other crypto-related products. Our perspective is that these products do not align with our offer focused on asset classes such as equities, bonds, and cash, which Vanguard views as the building blocks of a well-balanced long-term investment portfolio. The reason this is so stupid, right, is just I'm going to make one argument, and I think that one argument should quantify the stupidity of what Vanguard is saying. Okay. That's basically like saying we're not going to let people invest in Tesla because we believe in the long-term approach of ICE vehicles providing thousands of jobs across the country to people in GM and Ford, etc. Right? It would be like saying we're not going to allow people to buy Meta because we believe in the long-term mental health effects of people not seeing stupid Instagram videos on their feed, right? Because that just makes them less smart. Like you see what I'm saying? It sounds so ridiculous because it's an ideological statement around a subjective point of view. That subjective point of view is subjective, not objective, which means it is based on the subject's prescriptive understanding, not descriptive, but prescriptive understanding of the nature of how the world works. And so when they say long-term, investment theses that involve classes of assets that are good, quote unquote, it begs the question, what is good? Because Bitcoin has outperformed pretty much everything. It seems pretty good to me. Right? It's like just from if you're just looking at a return perspective or an argument around returns. So this idea of subjectively saying our clients, as Philip says, our clients will own nothing and they will be happy. It is very 1984-ish. And I think a lot of people that are on Vanguard, we have this other picture this morning. A lot of them said we're closing our Vanguard accounts immediately. And it's like, why wouldn't you? You have all these people. Look at this. I have a retirement account with Vanguard. I called them and said they will not be offering any of the Bitcoin. I'm working on transferring out my assets. A bunch of people saying the same thing here. Just transferred my 401k from Vanguard to Fidelity. It took about 15 minutes. I think Robinhood is a great opportunity. Robinhood right now, I was talking to Adam Bergman about this. Robinhood should come up with an advertisement right now. And that advertisement should be, hey, if you don't want to keep getting screwed by the boomers that think they can control what you're supposed to buy, switch to Robinhood. We'll give you 1% match. And he should extend that promotion because this is, I believe that is politically motivated. It is politically motivated. JD says, please stop. Your argument sounds ridiculous. I just want to, what part is ridiculous about a brokerage that is not supposed to have a political opinion, making a political opinion on what you're allowed to buy? I mean, it's literally like a brokerage telling you what stock you should or should not. That's not their job. Their job is to just give me the investment vehicle to be able to make an investment, not tell me what investment I need to buy, And so this idea that the Bitcoin or crypto is not part of their long-term mentality of how investors, they don't get a choice on how people should invest. They should provide the technology to allow people to invest. That gets a little, I don't know. It gets a little interesting when they think they have that type of motivation to decide it. Does Hood allow you to own Bitcoin in your Roth IRA? We're going to check right now. By the way, Verizon down 3%. We got some bad news on Verizon, so we're going to talk about them. Can I buy it in my Roth IRA? Oh, wait, no. This is Robinhood stock. Robinhood also got just destroyed today. Everything got destroyed after. No, you can't do it in your Roth. It doesn't seem like you can. Yeah, you can't do it in your Roth. Not now. At least that's what I'm looking at. You can't do it. Can you, Bitcoin? Can you do it in your Roth? Nope, you cannot do it in your Roth. Yeah, they don't allow in the Roth. I guess a lot of platforms don't allow in your Roth. Maybe Robinhood alone, but yeah, it's really weird. It's really, really, really weird on what's going on here. So let's look at the Bitcoin stocks as well because they're getting kind of hammered. So Bitcoin right now 46,300. The Bitcoin stocks. Yeah, it's like the smoking analogy that I made yesterday on Finance Junkies, right? So I was talking yesterday that my dad owned a liquor store for about 20 years. And when I was really little and I worked at the store and people came in and they bought cigarettes, I kind of felt bad. I was like, oh, is my dad killing these people by selling them cigarettes? And as you get older, you realize, no, those people make their own decisions. Like my dad makes his own decisions. My dad doesn't smoke. He sells people cigarettes. Why? Because he doesn't want to, fuck up his lungs, but he's more than happy making some money off other people choosing to fuck up their lungs. And he'll provide the, the tools to allow them to fuck up their lungs. And if they don't want to fuck up their lungs, then he's not going to make any money, right? It's a very simple kind of game. And so, there's all this ideology of how you should think about it. It's like, no, dude, it's an individualist society. People make their decisions and that's it. and you have to be fucking responsible for your own decisions. And I think as I grow older, that is the decline of what I'm seeing in America in general, is that we don't care about our own individual decisions anymore. And that's what's leading us to blame everybody else. But like, no, if you bought Bitcoin at 48,000 this morning, you're down. You're down. It is what it is. That's how it works. So Vanguard saying that they're going to protect their customers by not allowing them to buy the asset class that has outperformed every single asset class in the history of time is just insane. It is absolutely insane. So what do we have here? We have CleanSpark down about 7%, Coinbase down about 8.4%, Bitcoin down about 0.49%, Hut 8 Mining down 7%, Marathon down 12%, Cyrus down 7%, MicroStrategy down 5%, Bitfarms down 13%, Hood down 3%. Hood's getting just smacked. 1170, dude. We haven't seen 1170 in a minute on Robinhood. I mean, it is getting smacked. Absolutely getting smacked. Joshkin says, if Robinhood let me buy all the securities that I wanted to, I would transfer immediately. But unfortunately, they don't offer everything. Yeah, and that's just, a technical thing from their perspective. I think Robinhood needs to make an advertisement right now. I think they need to make an advertisement right now and say, hey, Vanguard clients, if you really want to have freedom in your investing decisions, you should come on over to us, and we'll give you 1%. And those Vanguard clients have a decent amount of money. 1% is a pretty good offer. Mag 7, Tesla getting schmacked today as well. We'll talk about their Hertz news. Hertz deciding to sell about 20,000 EVs on concerns that they can't really allow customers to buy the EVs because or use the EVs because there's not enough charging technology. So that's an issue that's going on right there, and we'll talk about that. Meta is barely down. Google fell from 146. Apple's down a little bit. Microsoft all-time highs. Microsoft's more valuable than Apple right now. Okay, never mind. Apple's just a little bit more valuable. But Microsoft at one point, when it was at 387, was more valuable than Apple. Now it's like 30 billion down. And Amazon's at 155. Nvidia is still at 550 for 548. Nvidia 553. It hit the top. Nvidia is not coming down. Did I buy Tesla today? No, did not buy Tesla today. Did not buy Tesla yet. RVM says, I don't blame Vanguard. I would love to know the counter argument. Honestly, I would love to know the counter argument. What is the argument for why Vanguard is doing the right thing? Because I'm curious. How are people kind of justifying that? I don't, it's hard for me to imagine that this is going to be okay with Vanguard customers, but we'll see. S&P, the market's going to close in about 30 seconds, but S&P 476, I mean, the S&P could have had a much worse day. The S&P could have had a much worse day in terms of that CPI report, and it held up pretty strong. So it's actually really good to see how the S&P is doing right now. All right, it is January 11th, 4 p.m. We got a lot to discuss. The stock market is now closed. All right, let's see where these markets have closed and what ended up happening here at the end of the day. So we've got S&P 476 right now, 476.35, barely down for the day, held up really well. SoFi 817, SoFi got schmacked, down 3.6%. Open Door is down about 3.26%. PayPal is actually up on the day. Wow, PayPal ended on positive 0.64% on the day. Ethereum is down a little bit. Bitcoin 46,309, Ethereum 2,500, Alibaba 72, Tesla 227, SoFi 817, Snapchat 1709, Disney 89.45, Disney below 90, Amazon at 150, Coinbase. Wow, Coinbase is at 140. Coinbase went from 165 this morning to 140. Wow. All right, Coinbase got hit as well. Netflix, by the way, Netflix has some news that came out around ad tier subscribers, but Netflix right now at 491. Square went from 69 to 67. Roku down 3%. Let's look at the actual ETFs. ARKB is at $46, so it's down 6.8% on the day. Beto 22.35. That one is slightly up. What are the other ones? There's one BRRRR. That one's down 5% of the day. Most of the Bitcoin ETFs are down about 5% of the day, as Bitcoin is down about 2-3% on the day as well. Nas says, when you invest at Vanguard, you're not just an investor, you're also an owner. This unique structure means that our interests are aligned with yours. As interest in cryptocurrency continues to increase, we'll continue to help you choose what's best for your portfolio. Vanguard's take, since cryptocurrencies are highly speculative in their current state, Vanguard believes their long-term investment case is weak. Yeah, but again, I get Vanguard believes that. I guess my question is just, why are they imposing that on their clients? Like, if I'm a Vanguard client and my brokerage believes that the investment thesis on crypto is weak, but I believe the investment thesis on crypto is not weak, I just don't understand how the brokerage gets to make the decision for the client. It's just like, that's like your grocery store saying, hey, this is not healthy for you. You don't buy it. Like, no, that's not how it works, dude. Like, you make your own decision. The grocery store provides it. Like, unless it's illegal or unless it's like meth, like it's not supposed to be off the table. And so I don't know. Vanguard caters to older customers and is managing 7.2 trillion. They don't want to risk it. My thing is, if you're catering to older customers anyway, then if those older customers don't want the asset class, they just won't buy it, which is fine. But the customers that do want it, I feel like they should have the opportunity. I mean, it feels like it's the logical thing for it to work. And what's the risk? I mean, I don't understand what you mean by risk. I mean, if no one buys it, no one buys it, like, from a risk perspective, their job is to offer it, not necessarily be, I mean, unless the risk is they think Bitcoin is going to shit, then yes, then it is a risk, right? Then their argument is that if Bitcoin goes to shit, they don't want to be responsible for that. It's just, I don't know, dude, when BlackRock's saying I don't know why Vanguard is necessarily in the worst place. I am a Vanguard client and glad they are doing this. All right. So I guess if the Vanguard clients are okay with it, but if some clients are not, they're leaving, dude, and they're taking their money with them. Let's get some updates on Bitcoin price compression action today.
What's going on here?
So this is the day. This is sort of the reality check that we've all been, waiting for. If you actually look at the fundamentals, this is not a good thing for Coinbase. This is a bad thing for Coinbase, right? They were basically about to, cannibalize their most profitable business.
But he seems happy. He seems like he's taking a victory lap. He says, we're going to be the custodian. I thought that was an interesting choice of words for a lot of these funds.
So they are the custodian, and it's a very, it's a very good point. He's right about this, but the fees that they get for AUM, so they get about 5 basis points, we estimate, to be the custodian. That's trading off 250 basis points. That's 2.5% for spot Bitcoin trading. So they're giving up a really profitable business to get into like a non-profitable business.
And just to be clear, so for those people, there's plenty of them out there who have bought their Bitcoin on Coinbase in the past. They're basically charging 2.5% to do so.
Yeah, they're trying to buy, to sell, and now there's an alternative. Now you can do it anywhere. You can do it somewhere else.
What you say raises an important point, not to take this off, we'll bring it back to Coinbase, but a lot of people have said, because there's been the celebration for those who are going to offer these products, obviously, that they're finally approved, but can they actually make money? You already have 11 different options to pick from. As you said, do you think that they can offer low management fees for these ETFs or ETPs for something that Coinbase was charging 2.5% on transactions for previously?
So I think that now the massive price contraction or deflation in Bitcoin trading, that era has ushered today. I think that's what's going to exactly end up happening. We've always been warning about price compression in crypto trading. Today marks the day when this is really starting, and that's why the stock is trading down.
Why is it so much more expensive, if I could put it that way, to trade Bitcoin than it is to trade other stocks, for instance?
On spot?
On these exchanges, on spot, yes.
On the spot?
Yeah.
It's like, it's because they can. Because they were the only name in town, right? So you have FTX, which doesn't exist anymore. You've got, Binance, which, is in trouble. So they're really the only, up until now, Coinbase was the only name in town, the only kind of legitimate way in America to trade Bitcoin. So they were able to like raise prices, which they did earlier last year, and they could. Going forward, they're not going to be able to do that. This is why this moment is so important, because, that's why it's not a good day for Coinbase, because pricing is coming down.
And we've talked.
Okay, so he's pretty bearish on Coinbase right now with this. And I don't know necessarily if he's going to be correct on that perspective, but Coinbase, we are seeing some downside momentum here. Now, it's up after hours. One of the things that's interesting here about Bitcoin is, and this is if you read the prospectus in the ETFs, is that a lot of the customer funds for the ETF are settling after hours in terms of the actual purchases from the BlackRocks and ARKs of the world of Bitcoin, which means it's going to be interesting to see after hours if Bitcoin can get some momentum here, because if these funds have to settle after hours, and that means the Bitcoin has to also be purchased after hours, which means, maybe there's some more momentum coming in on Bitcoin. We're seeing some nice green candles right there, 46.4 30. We're reversing the negative trend right there, as you're seeing. It was pretty much negative for the past couple hours, and now we're seeing it's getting a bit more positive here. And so Bitcoin's going a little higher. Ethereum as well, erasing some of their gains. All the miners are green after hours. It's really interesting. All the miners are green after, even Robin is green after hours right now. And you've got Bitcoin here at 46,400. It's going to be really interesting to see if these guys actually start moving higher on the inflows coming in. Again, if you read the prospectus from the ETFs, the inflows should be coming in on the end of the trading day, not the beginning. So maybe we're going to see upside there. Saw a tweet saying there's $4 billion in Bitcoin ETFs waiting to be spent on Bitcoin. Yes, that's exactly my point. And that was not allowed to be spent during the day if you read the prospectus of the ETFs. Why? I have no clue. But that is what it's saying. So maybe a little bit later today, in the next couple hours, we are going to see some more price action on Bitcoin to the upside. All right, let's talk about Verizon real quick. We've got some news on that. And then we're going to talk about the Tesla Hertz situation because I want to go deeper into that. Verizon is in a tricky situation. They just had the EPA bring in Verizon and AT&T, okay, based on problems in their lead cables, okay? So the lead cable thing that happened on July 27th, that is happening right now for Verizon. Or sorry, it's happening again. I mean, it happened before, but now it's happening again. And that's some of the problems we're seeing right now. Verizon down about 3%. The EPA is calling them in on lead cables being a bit more than what they thought it was going to be. And AT&T as well is down on that happening. Hold on, let me pull up a couple of things because that was some news we saw today. Yeah, right here. So the EPA called on to Verizon. So this is what I'm saying. It's not just old news. This is stuff that's happening today. This is what I'm trying to say. EPA calls on telecom executives to meet about lead-sheeted phone cables. This is January 11th. This was posted today. It's posted at 3 p.m. That's where you saw Verizon start to head down. Agency reports finding more than 100 readings with elevated lead near cables and high priority. Companies say their own tests show low lead levels. So I don't think long-term is going to be an issue, but this is something that the market got annoyed with because they thought this was over. And today the EPA was like, nope, the same problem you guys had in July, the same issues are happening right now. And that's not a good thing for Verizon. Verizon right now, and Verizon's had a nice week. I mean, Verizon was up at $40. Verizon is at $37.89, down about 3% on the day on this news. AT&T is down AT&T is down almost 4% on the day as well on this. So that's not good for any of these companies. We'll go back to that. We'll get a little bit more coverage on this. First, I want to go to the Hertz CEO talking about Tesla. So Hertz is selling 20,000 EVs because they don't have enough infrastructure for their clients to charge those EVs. That's kind of the core argument. Let's hear from him right now as well.
Got some pretty big news from the major rental car company that all of us know, Hertz. They're announcing this morning it will cut 1/3 of its electric vehicle fleet over the year. CEO Stephen Schertz joins us right now to discuss the company's decision. Steve, well, first of all, welcome. Just welcome us.
Thank you, Jim. Good to be here.
Thank you.
Good to see you.
All right, Steve. I know you as one thing and one thing only. The man who just knows to tell the truth and nothing but the truth about financials from the days when you were at Goldman. This seems like a very positive for Hertz, the numbers, but definitely an asterisk for the adoption of EVs in this country.
Well, I think, look, we took a bold move and are making a strategic adjustment to our fleet to take 20,000 electric vehicles out of the fleet. It's really to respond to the reality, which is we're trying to bring supply in line with demand, and we're addressing a cost issue that happens to be related to the EVs in the context of damage and damage costs. That's what it is. But in the end, this is about the numbers. It's about the financial performance and the operational and depreciation, but equally the operational integrity of the business. And so we'll put EBITDA on in the next 2 years that will equal what the charge was, and we'll increase cash flow by about $250 to $300 million. So this is it's not about the broader issue of EVs for the company. It's about financial performance and operational integrity and adjusting ourselves in the way in which I think the business needs to be run.
No, I think that one of the things that you were spot on was that, look, Tesla.
So it's a strategic decision they're doing for their clients, but I think the market is scared that if this is the case, what does that mean for demand on Tesla? And given you got earnings in 2 weeks, the market's not really thinking about the bot right now. They're thinking more about short-term demand.
Was the largest in the country, and you wanted your fleet to reflect Tesla. At the same time, unlike what Cathie Wood said earlier, you were explaining that there is depreciation. These do not go up in value after you buy them.
No, I mean, look, the reality here is that we're experiencing the consequence of a material price decline in Teslas, but in EVs more generally. So at the beginning of this year, when Tesla took down the price of their cars, residual price falls, depreciation goes up. That's obviously a cost to the business. We need to face that reality. Tesla did what they did for reasons that are presumably good for their company, but we just need to adjust to the reality of what the cost input is of this car. And so we've made this move to really put ourselves back, on track. It's interesting to note, Jim, that demand for our product is real and is sustaining. What we put in our 8K as an indication of what happened in the fourth quarter, demand was there. Revenue was in line with what expectations were on a seasonal basis. The issue I'm addressing is one of our cost base and the influence that EVs have had on that cost. And there are certain circumstances like price decline, like residual decline and depreciation that's out of our control, but you need to react to it, and we're reacting
So
to it.
that's interesting. It's different from demand or behavioral friction when someone comes to the counter, because originally the thinking was this will be a nice way for people to experiment. Did that happen, or did it not?
It did happen, and it is happening. It's just not happening at a level of demand that justifies us maintaining a fleet of this size at this moment in time. Carl, the one thing I would say is that at some point, the reality of EVs and Teslas being the best-selling car will at some point render them the best rental car. It's not yet. So we may have been ahead of ourselves in the context of how quickly that will happen, but that will happen. And I think, in the end, we're in the business of giving consumers choice. We're including in that choice electric vehicles. And there is a significant component of our customer set that are still paying us a premium for these. It's not at the level of demand that we anticipated. And I think a smart company is one that's agile, makes an adjustment.
I mean, look, you can't blame him. He's adjusting on based on what he's seeing right here. And he's saying, look, if the customers don't really want the EVs, then we can't have to provide for them. Hode says sounds like a Hertz demand issue rather than Tesla. I think it's more of an EV problem, not a Tesla or a Hertz issue, because at the end of the day, if Hertz has a set number of vehicles and they have customers across the United States, and those customers are calling in saying they don't want a Tesla, they don't want an EV, they want just a regular car, and Hertz is like, yeah, but you could pay a little bit more for a Tesla and you get this great experience and all this stuff. And all these people are like, yeah, but I don't care. I just I don't want to have the range anxiety, all that stuff. Hertz, at some point, for them to make a decision to sell 20,000 of these vehicles, that means they had a realization that they can't fight the market on this. I mean, they can't fight the consumer. If the consumer does not want the EV, they've got to adjust. They got to be able to offer what they can offer, because their core business is on the renting of cars, not on the renting of beautiful Teslas, right? Some people just want the most bare minimum when it comes to a car. Yeah, dude, like if I go so I'm going to California on January 16th, and I was going to rent a car to drive somewhere because I have to go do something. But instead, I'm just meeting up with Carlos, and he's just going to pick me up instead. But if I were to rent a car, I don't want to rent a Tesla. I've barely driven in a Tesla before. I don't know how to drive a Tesla. I know how to drive regular cars. So I'm fine driving a car that's not my Honda Civic, but I'm not fine driving a Tesla. I don't know how to drive a Tesla. I know how to drive a Tesla. I've done it before, but it's not like I wouldn't feel confident going for a couple hours in a Tesla. So, there is some hesitation there. I just didn't think that hesitation would be that widespread to the point where you have to sell 20,000 of those cars. They bought 100,000, right? That was the deal. That was in 2021. Hertz, 100,000 Teslas. I think that was the deal. Yeah, they bought 100,000 back in 2021, and they're selling 1/5 of them. So 20% they're dumping to get regular cars. Interesting. FYI, Carlos is going to pick you up in a Tesla. Yeah, I know. Carlos is going to pick me up in a Tesla, and I'm happy for that. But Carlos knows how to drive the Tesla. I personally, on the Tesla, there's no brake, is what I like. Or no, sorry, there's a brake, but you don't have to press the brake when you. There's something about when you're driving in a regular car, you take your foot off the. Oh, I know it. When you take your foot off the gas, it slowly slows down. On Tesla, when you take your foot off the pedal, it just stops. That's the one big difference I had when I was driving it. I was like, yo, this is kind of weird because I'm used to like it's slowing down as I took my foot off the gas. But on Tesla, when you take your foot off the pedal, it just boom, it stops. And so like that, it's stuff like that, right? That's stuff I didn't want to deal with if I had to rent a car. Amit sounds like a boomer. Yes, I'm a boomer when it comes to EVs. Josh says, I think it's a financial move to claim the depreciation tax benefits, but of course he's going to say on CNBC we're taking advantage. He's not going to say we're taking advantage of the tax system. That's interesting. I mean, I don't know if, I mean, maybe look, but 2 years to do this thing for taxes after 2 years of buying the Teslas seems a little early. I mean, maybe that's good. I think it might be a little bit more on the demand side. Now, Hertz is collaborating with Palantir, so maybe AIP told them to sell Teslas, which is a realistic possibility. They probably could have said, "Hey, AIP, we're in a tough situation. What the hell do we do?" And AIP was like, "Dude, just sell the Teslas. Like, it's pretty simple." So Palantir wins regardless. But I forgot to turn off my ICE vehicle sometimes because Teslas use phone key and turn off automatically when you move. Yeah, there's a lot of differences, and you got to get used to driving it in a lot of different ways. It is definitely different from different angles. Let's take a look at Tesla right now and see where it is. Now, again, this is not bearish Tesla. I don't want to misconstrue that. This is not like by any means bearish Tesla. It's just short term. I think the market's trying to reconcile what is Hertz actually saying when it comes to demand, because basically the logical syllogism here is that if Hertz has to sell these vehicles because their consumers don't want to drive EVs, then what does that mean about the state of EVs writ large in the United States or just globally? I don't know if Hertz is the best indicator for that, but it is something that the market's, not necessarily happy about. Tesla down 2.87% of the day. Nothing too crazy, but it is down. What else do we have? Bitcoin, 46,395. Bitcoin still not really doing the whole, God candle thing that we all wanted to see. A little bit was there in the morning. Right now, it's kind of flat. Snapchat, 1709. S&P flat on the day. Green after hours. Meta flat. Coinbase down about 7%. Coinbase recovering a little bit. It was down a bit more. Roblox up a little bit. NASDAQ, 14,970. Google down. Dogecoin is up about 0.78%. And Apple is at 185. Yeah, nothing. I mean, NVIDIA held up today and the S&P held up today. Those are the two assets that held up today. If you had NVIDIA or the S&P, you held up today, which is not the worst thing about. Palantir also took a beating. Palantir is down 1668. It was at 1620 at one point. So Palantir also fell a little bit on the day. Short-term issue for Tesla, perfect for dip buyers. Yeah, I do think this is a buy the dip on Tesla. And I think if it goes below, 220, it's definitely a buy the dip. Let's get a soft landing thesis and see why today's CPI is not really ruining that soft landing thesis.
Get some more perspective on the CPI print, what it means for any rate cuts. Former PIMCO chief economist Paul McCulley is with us, now an adjunct professor at Georgetown. Paul, great to have you back.
Good morning. Good morning.
Was this a troublesome print?
No, I don't think so. It was a noisy print. We got another disappointment on homeowners equivalent rent, still not telling us what the real world is telling us. But in general, I think it's just noisy, and the underlying disinflationary trend is very much intact. And I do think that rents are going to come down as the year progresses. And the most important issue for the markets is the pivot is unambiguously in. The data have said the Fed is finished. The Fed effectively has said they're finished. The next move is a cut, and it's going to be a series of cuts to take us back to neutral. So that's the theme the market is working on. I think it's the right theme.
And look, I think he's right about that. Even though CPI came in hotter than expected, it's not reversing the Fed's course of action, which is why markets kind of ate it up and it wasn't too bad.
And the day's data doesn't change that really at all. It's noisy in the data, it's noisy in the market, but we're fundamentally in a soft landing with a pivot already in rhetorically, and we're just waiting for it to come in reality, timing, pace, and magnitude.
Okay, so I don't know who Dick Tracy is, but I've heard the name before. So, yeah, he definitely looks like Dick Tracy. That's the... I'll agree. This guy's an interesting dude. We have PPI tomorrow as well. That'll also give us clarity.
But there is this sort of nagging worry in the back of the market's minds, I think, and probably the Fed, that last mile from 3 to 2% on inflation is going to be tricky and stubborn, and they don't want to cut prematurely and risk not getting there or potentially going the other way. What do they do about that?
I think that's very, very right. I think they're warm and fuzzy, but not urgent to start the cutting process, in part because of the last mile issue. But I think echoing what Mike was talking about is they want to see somewhat softer economic growth and softer labor conditions. And the economy is still strong. It's not, strong like it was a year ago, but it is still strong. So I think they will disappoint, if you will, the market probably all year long in lagging where the market is pricing because of the last mile issue. But also, I think they want to see softer growth, softer labor conditions. And in fact, President Williams essentially said that yesterday because his forecast for growth this year is about 1.25%.
All right, so that's the Chicago gangster from the 30s basically telling us that the Fed is still going to cut rates, and that's why we'll be okay. Look, I think that's the big thing for those that are trying to analyze what happened with CPI today. CPI did come in hotter than expected. I was tweeting last night that I think CPI is going to come in hot, but I think the market's going to eat it up. And that is pretty much what happened. I just didn't think it would come in this hot because when I saw the CPI this morning, I was like, oh, I don't think the market's going to eat it up. I think the market's going to sell off on it. And the market ate it up. NVIDIA at 450, S&P at 476, Apple barely moved. Microsoft hit all-time highs. Microsoft was more valuable than Apple today. I mean, it's just insane. It's just absolute insanity. The market did not care about a hot CPI. And also remember, the reason CPI was hot was because of shelter and energy. Energy reversed a decline from 2 consecutive months to an incline. And then shelter continues to be lagging or stickier, probably both, more than what was expected. Poultry was up a little bit. You had food up a little bit. So like there were all these airlines were up a little bit. There was all this stuff that was up, but shelter and energy, those two were the worst. I think those are going to come down a lot more. If you're looking at your gas prices, if you're looking at, rents coming down in New York City and San Francisco, I know they're still high, but they are coming down sequentially. It's going to factor in the data. It's just, if it doesn't factor in before March, we're not getting the March cut. It's just not happening. If it does factor in before March, then maybe we will get the cut. 64% of analysts still believe after today's CPI that the March cut is happening. Let's actually pull up that tool right now so we can see it. March right now. Oh, wow. It's even more. It's 73% now. 73%. Look at that. 73% think we're getting a cut in March. It's just weird, dude, because either that is totally off and it's not going to be 73% or it's not going to be a cut, and then the market is really pricing this in the wrong way, or it's going to happen and then March is where we begin the cutting cycle. But the elephant in the room is there a cut in March because something bad is happening with the economy? Now, again, all the macro data we're looking at, unemployment is fine. A PMI is fine. It's at the levels we want it to be. Growth is not necessarily accelerating, but it's definitely not slowing down. At the same time, inflation is slowing down. So macro indicators are showing us that things are all right. 10-year at a decent level. 10-year right now, I think at 4.0. Bill Gross, godfather of bonds, thinks that the 10-year is still overvalued. Right now, it's at 3.975. Money markets still have $5.9 trillion on the sidelines. So the macro factors are not really showing us that things are in a horrible situation, but that could change as we get more data. Apple isn't growing right now. Yeah, I mean, look, so Apple's one of those stocks that's not growing, but it has a high PE, so that is one thing that could come down. But outside of Apple, from a pure macro perspective, nothing is really, from what I'm seeing, breaking in the economy. But that could change, and that could lead to a lot more rate cuts quicker. You guys are ruthless with these comments. That guy for sure has been to Epstein's Island, bruh. Guy looks like Jimmy Stewart. Oh my God. Oh my goodness. This is ruthless. This is so ruthless. He is an interesting guy, though. I mean, I haven't seen this guy on CNBC in a while, so it's always nice when they get a guest who's talking about economics in a very exciting way, you know. All right, let's go back to Bitcoin. Let's see how bad Bitcoin is. Where are we at? 46,200. It's definitely been a disappointing day, just in terms of the people that had expectations that this thing would go to the moon. We have not gone to the moon. We're still on planet Earth, quite frankly. We're on the runway, and now the runway is delayed, and you're just sitting there wondering, why am I even on this flight? But, you know, this is a long-term thing that we have to be a part of. Did you buy the Bitcoin ETF? No, I didn't buy the, I didn't buy the ETF because in my heart of hearts, I was just like, I feel like it's going to eventually get to a better price, right? Now, granted, if Bitcoin went to the moon, the ETFs would have probably fell a strong, gone with it. But for some reason this morning, I was just like, I don't want to buy the ETF on the opening day. I feel like that's not what you usually do with these ETFs. So I didn't buy it at all. I do think it's going to be way easier now if you want Bitcoin exposure for the average person, just buy the ETF, and that should unlock more inflows. The only way we're wrong about the ETF thesis, and then we have to move on to the halving thesis as like the next big catalyst, is that if there's enough sell-offs to match the inflows, right? So if there's $2 billion of inflows coming in to buy Bitcoin at 46,000, and that pumps it to 48, and there's enough sell orders at 48, then it kind of, the inflows don't really matter at that point. But the question is, are those inflows going to be, those sell-offs actually going to match the level at which the inflows are coming in? Even if you DCA in it, today was not a day to get in. That's exactly what I thought, dude. That's exactly what, even if you DCA, today was not a day to buy. That's why I was curious. People were posting that they're buying the ETF. I'm like, why today? You kind of let big money start spending today and you wait for things to normalize. But retail, I didn't think this was the exciting day to buy them. Cash secured puts on the ETFs. It depends on the premiums. I mean, now that they're red, yeah, the premiums might be okay. But in the morning, they were not as red as they were towards the end of the day. Some stocks were green. That's true. Only one ETF. Which ETF do you guys like? Let me show you the list of the ETFs, because I have no idea, quite frankly, which ETF is the ETF to buy. There's ARK, there's BlackRock, there's not Vanguard, because they want to decide what you're allowed to buy. So it's not them. There's Fidelity, there's Bitwise. There's a bunch of these, but I don't know which one actually is worth any of them. Grayscale, Valkyrie, VanEck, Wisdom Tree. Like, I don't know what's the difference between any of these, quite frankly. Like, that's I saw Cathie today. We should probably pay a clip from her. She was talking about why her ETFs are the one to buy. And she was like, we have 3 competitive reasons. And then she listed all the reasons. And I was like, I don't think any of these are competitive. It's just like, okay. Like, that's not, I don't know if that's the best. I don't know how strong these reasons are, but let's listen to Cathie actually talk a little bit more about Bitcoin and what she has to say. Here we go.
Pricing, but the price of Bitcoin. You and I have had conversations now over many years where you've talked about Bitcoin being worth something on the order of $500,000, literally in only a couple of years from now. Do you stand by that? How does this ETF change that, speed that up, slow it down? What do you think?
Yes. So you'll find in our big ideas, so that's at arc-invest.com, the building blocks for our price forecast. And our base case is in the $600,000 range. Our bull case, and we think the probability of the bull case has increased with this SEC approval. This is a green light. Our bull case is $1.5 million by 2030. You can see the building blocks. You can see how conservative we are in terms of those building blocks.
Okay, so 1.5 million by 2030, and they have conservative assumptions to get there. I haven't looked at the research. I'll look at it and I'll go deeper and I'll talk about it, but that's a big return in 6 years off 47,000.
This is a big idea. It is the first global, decentralized, digital, rules-based, critical there, rules-based monetary system in history. It is a very big idea.
And let me ask you the separate question, which is, do you believe that for it to get to those type of numbers, it has to become a currency, not just an asset? One of the things that Brian Armstrong was talking about is he thinks that this is just going to create a lot more interest in crypto across the board, and that is what's going to actually propel this and might even change the dynamic with which Bitcoin is being used, which is currently today as digital gold or something like that, but potentially actually could leapfrog into the currency that people have talked about for many years.
Yes, our first paper on this was in 2015. The white paper is still on our site. And we tried to figure out, could Bitcoin serve the three roles of money? Store of value, as you say, most people agree with that one. Means of exchange, unit of account. And the answer to that was yes. We put out a Bitcoin brainstorm with our partner Bitcoin Park in Nashville. And it examines the convergence of artificial intelligence and Bitcoin. And you'll hear his nickname's Roast Beef on that podcast talk about that convergence and how it's going to redefine the division of labor. It's probably going to put the gig economy on steroids. And it's starting already in the emerging markets, in Africa in particular. So it's very exciting. I don't think people understand how hard at work the developers around the world have been. Lightning Network is a big part of leveraging the base layer Bitcoin. So we're very excited. We're so happy that ARKB is going to be part of the ecosystem.
Now, here's another one of her talking about specifically her own ETF as well.
Green light on. It's a happy day for a lot of people in the space that you've been living in now for quite some time. The big question I wanted to ask you, and it's really, we've now talked to a number of players in this space, is as you introduce your ETF, how are customers, the public, supposed to think of the distinctions between the way you're doing it, the way BlackRock's doing it, the way Fidelity's doing it, the way Grayscale's doing it, and how should they think about the distinctions?
So this is a good question because she's going to explain why you buy ARKB over all the other guys.
Sure. We think ARKB has three competitive advantages. The first is the infrastructure and operations competitive advantage. We are partnered with 21 Shares, which is the largest pure play crypto ETP provider in the world. It has $2.5 billion of assets, 40 funds over 5 years, through all kinds of markets and forks and halvings and airdrops. So it's been through it all, battle tested, so our infrastructure is there. And I think it's the only one, we're the only ones with both the crypto and the ETF expertise. Two, our research.
So that's the first argument. Her first argument is the technology and infrastructure that they have to actually buy the Bitcoin, I guess, is a competitive advantage. The second is their research.
We have been researching Bitcoin for 10 years, actually more than that, with Brett Winton, our chief futurist. We are giving our research away. We have been educating the community. So has 21 Shares. And I think we're recognized for our Bitcoin research. And in fact, many people know us for our Tesla position, but Bitcoin actually was more controversial first when we gained exposure to it in 2015 when Bitcoin was only $250. And then there's one more competitive advantage, which I don't think people should underestimate. Our distributor, Resolute, has been a partner since 2016. So that sales force had to learn what Bitcoin was, and they had to study it, and they had to read our research, gain conviction. They know how to hold clients' hands. So we think ARKB has those three very important competitive advantages.
Longer term.
So look, the first one made sense to me. The technology, in the infrastructure to actually be able to facilitate the capacity to buy the Bitcoin. Maybe that's better than some of the other guys based on their partnership with 21 Shares. But the research one is just stupid. I mean, like, why would I buy your ETF because you've done research? Like, there's random YouTubers doing research, right? Like, why? Like, I didn't get that at all. I don't know how research is a fundamental moat around your ETF, unless she's saying that, oh, Like we're not going to let you down because we're doing so much research, and the research influences how we think of the technology. And like, but at the end of the day, it's like, I just want to buy the ETF. I don't know why the research, it's like, so I didn't get that part. And then the last thing, I don't even know how that made any sense. The last argument she made, the only argument I got was that the technology is there. But outside of that, the fees being lower, she could have mentioned that they have the lowest fees, or at least the lowest fees that I've seen, but not anything besides that is like a unique reason to get super, super excited for Bitcoin. Here is the volume. We just got updates here on the volume for all the spot ETFs today. So this is what we have right here. Apparently Grayscale, the argument is that most of this volume was sell side pressure. Grayscale had the most at 2.26 billion. The Van Neck had 25 million. ARK had 280 million of volume. And the BlackRock had $1 billion. Fidelity at 685 million. So yeah, I mean, volumes are okay, not like crazy numbers, but it's definitely nothing like super insane that would create, I guess, a ton of buy side pressure on Bitcoin right now. Bitwise might have the lowest. Yeah, they might have the lowest fees. That's true. ARK has 0.25. Bitfarm. Oh, BitB has the lowest at 0.2. Okay. So that's, yeah, there you go. That's lower than ARK's as well. Does ARK have the most ETF offerings? I don't think so. I think ARK has like 6 or 7 ETFs, but I think there's more. I don't know. Maybe ARK has the most popular ETFs. That's probably for sure. Or at least to the retail base. But yeah, that's what we're seeing right now. You need research to buy Bitcoin compared to everyone. Yeah, the research argument was like, all right, Cathie, you're stretching. It's okay. You can do your stretch. I know you didn't go to the gym this morning, but that's a stretch. She's like, well, our research. I was like, dude, what? Your research is free. How does, like, I could just Google research. I don't know why that's a reason to buy the ETF. But all right, that's it. Let's finally look at the last price action here, and then we'll end it for today. Bitcoin 46,395. Bitcoin miners are down or slightly green after hours. Max 7. Nvidia is doing the best. Microsoft's doing the best today. And then all these other stocks are pretty much either flat or red. Again, S&P didn't have too big of a decline. S&P is doing pretty well at 476. After hours barely down. And then Palantir had a little bit of a tough day, down 0.66%. But otherwise, not too bad. Verizon also down 3% on the lead cable news that came today as well. All right. I think that's it, folks. We will see what happens in the next coming days. We got Friday. Friday is always a tough day for the markets. Things tend to sell off. So let's see what happens. And let's see if some volume and inflows start flowing in over the next few hours, given crypto doesn't stop. All right. I'm doing a podcast with Steve in an hour, 5:30. We're going to be talking about Celsius. This is our weekly podcast where we pick one stock and dive deep. We're going to be talking about the most un-American energy drink in the world. They choose to name themselves off after the metric system. So we're going to be analyzing Celsius and their path to grow in America, even though they are un-American. All right, that's it. I will see you guys in 50 minutes on that podcast. It's already live on YouTube, so you can just click it and we'll be live at 5:30. Bye, everybody. See you then.